Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. All we ask in return, please refer a friend. Today is Tuesday, it's June 5th, 2012. Looking at the U.S. markets today, Dow Jones, Russell 2000, and the NASDAQ, as well as the S&P. Main thing here that we're looking at are conflicting signals, and so you need to know what the charts are telling you, and you can take advantage of them how you choose to. I will be doing one thing, you'll probably be doing something else, or maybe some of you will do it one way and others will do the other way. We'll find out. Basically, right now, we're still in this overall downtrend, obviously a lower series of lows, lower series of highs. And that is most important element of the chart is the direction of the trend. And when you're looking at that, you can clearly see it is down. You want to trade with the trend. You can, on occasion, counter trend trade, and you have an opportunity to do that here. Main thing you can see, you have a hammer candlestick formation here, and you have a confirmation today being a higher high today than you had yesterday, as well as a higher low today from one candlestick to the other than you had yesterday. So this could be an opportunity where I could actually put a little blue arrow here saying you could take this long opportunity with a stop set off of this low right here, 1 cent below that, so that would be your stop loss limit, and you could be looking for this to bounce to the upside. You have another reason to believe that's probable simply because you have this low point close here and then a lower close here. When you look at these two, you draw your trend line there, you can see it's trending down, yet the corresponding time period on the ultimate oscillator, low point here, higher low here. We talked about this, I think it was last Friday, telling you that this situation could set up, giving you a bullish divergence formation, and that also calls for a bounce to the upside. However, a bounce to the upside in this situation, because we're still in a downtrend, is nothing more at this point, nothing more than a counter trend bounce. So all the same rules would apply. You would keep a tight stop as every day progress higher, you would advance that stop, and you would continue to do that until you are eventually stopped out. I'm not going to take this trade, and I will show you that this same trade is available on many of the U.S. markets. The problem I'm having with it is that it's only available on the U.S. markets. The reason why the U.S. is being pulled lower is because of what's going on over there in Europe, and when those charts are not confirming this reversal situation, I have a problem believing that this is anything more than just a counter trend bounce, that I will actually be short the next high, as opposed to seeing a breakout reversal from a downtrend to an uptrend, blah, blah, blah. I don't see this as a big rally opportunity. I see this as nothing more than a counter trend bounce. Like I said, the European markets are not confirming that. If you follow us on Facebook, or Google Plus, or Twitter, you got the news today that showed that Spain has basically just said, look, we can't do anything anymore. We need a bailout. It's basically the situation they're in now. With that news still developing, what's going on in Europe, why are we buying now? Why is this now a great time to buy? Spain is actually coming to that point of the tipping over point. That's not where I want to be doing my buying in this market. I want the problem solved or something dealt with before I feel confident enough to go out there and buy. Now, some of you will be a buyer in this market, and that's fine. It makes sense. I understand why you're doing it. The charts would even confirm that you could do that. But just remember, at this particular juncture, all you're doing is trading a counter trend bounce. That's all this bull setup is actually telling you, is opportunity there for a bounce. Nothing more, nothing less. As you can see, I am still short on the Dow Jones Industrial Average. We went to get the signal here. You can sell at that point. I've advanced the stop to this point, so I have no risk on the table, small gain. But there's not I could actually advance this stop a lot lower to 1 cent above today's high and get stopped out a lot sooner and make a little bit more money. But I'm not going to do that. And I may get stopped out. We may see a rally up here and get me stopped out, and then whatever. I'm still like I said, looking at this as being a counter trend move. I expect you'll find the same resistance level that you found before, because this previous support line that we talked about is now acting as resistance. So a bounce up here about the same level, give me a shooting star signal, just tells me to get short again. It doesn't give me anything other than a counter trend bounce that I can short. And I'll also be looking at the ultimate oscillator to see when it starts to peak out. If it gets up there near the 70 line, that's typically where you find your high and your peak situation. So that's where I'd be looking for those opportunities. Looking now at the NASDAQ, we see basically the same overall picture, series of lower highs and lower lows. This thing is obviously in a downtrend. And now we have come to yesterday's formation of a candlestick, of a hammer candlestick formation here off of a low point, and that's something that you could be a buyer of. If the following day gave you a higher high, you got that, then that's basically the confirmation we look for. At this point, I could mark it with a blue arrow pointing up, saying you could be a buyer here with the stop set right here, 1 cent below this day's low. You would continue to advance that stop as you continue to move higher. But again, I want to repeat what I've just said for the Dow Jones Industrial Average. This is nothing more than a counter trend bounce. You could trade this, and if you do, you want to advance that stop. The main thing you're looking at here, low point here, at the close here, it's low, and then it's low point here at the close. It's trending down, not as much as the Dow Jones, but of course it's going to vary from chart to chart. The corresponding low point of the ultimate oscillator here and here, you can see that we are trending up. This is a bullish divergence telling you to expect a bounce, but a bounce is not a reversal, not a change in trend. It's just a counter trend move at this point in time. So I will be watching that bounce to see if I can find an opportunity to get short. Remember, I did not go short here. So in this situation, I would love to see a bounce and a nice signal on the sell side. Again, same reasoning being that Europe's financial crisis is still brewing, still getting worse. I have no reason to go out there and buy these particular markets at this particular time. The Russell 2000 Small Cap Index, same overall story. Overall trend is clearly defined as being down. But you do have a signal from yesterday's hammer candlestick formation confirmation today. Higher series of highs, higher series of lows. Everything telling you you could be a buyer here for a counter trend bounce, and with the stop set right here. Again, this is also giving you confirmation on the ultimate oscillator, telling you that you have a bullish divergence forming here. You've got this trending up, this close here, and this low close here trending down. This would tell you to look for it to go in the other direction. But again, just a counter trend bounce. And again, in this scenario, I am not short, so I would use that opportunity, if we got it here to the 70 line again, to be looking for a nice sell signal, something like a shooting star formation like you saw back here. And again, I would look for this previous support line to be acting as resistance, just like we saw. Hang on a minute. Just like we saw here. So that would be my level of resistance there. None of this here would be indicating an opportunity to reverse this trend. Remember, if your trend is in a downtrend because it has a series of lower highs, and then you have a down sloping neckline which is now acting as resistance, you're going to end up, if you find resistance there again, which you are likely to do, because it's sloping, it's got a negative slope to it, you're going to have a series of lower highs. That's just the inevitable situation there. So I would again look for this to just be a counter trend bounce, but I would not look for it to be a change and all of a sudden we're bullish and big rally and blah 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 blah. The problem in Europe is still growing. The S&P 500 Large Cap Index, or the SPX, and this one shows the same overall scenario. We have the obvious, clearly defined downtrend, and now we have this hammer candlestick formation confirmed by a higher series of highs and higher series of lows in the following day. You can be a buyer here with the stop set off of this low for a counter trend bounce. Again, I will not take that, even though there is the bullish divergence formation here. So you guys who are out there doing this, buying this market, this is your reasoning why you're doing it. It makes sense to me as well. I understand why you're doing it. So this would make sense. But again, I repeat the same thing I've already said for all the other charts, but they'd just be a waste of time because you know everything that I know at this point. One item to note regarding the S&P 500 and short position we have here, we've already gone short at this point. We talked about this sell signal here. You could have shorted the following day and the test of the previous support that broke down. I've left my stop right here, so I have no risk on the table. But I could advance the stop, and I could have done that yesterday as well. But I expected we would see a little bit of a bounce here. So I'm leaving the stop backed away and letting the market breathe a bit before getting me stopped out. So that's just something I'm doing personally. Someone else could advance the stop even to today's high, 1 cent above today's high, and they would be able to lock in a little bit more gain. That's possible. You can do that as well. I'm not going to do that in this situation, but I would do that on the VIX, and we actually did that on the VIX. Let me show you that real quick. Looking now at the VIX, the volatility index, which runs the inverse of the S&P 500. If you see the S&P 500 in a uptrend, then you will see the VIX in a downtrend, and vice versa. In this case, we have the VIX in an uptrend, which means that the S&P is in a downtrend. In this situation, I did advance the stop to yesterday's low, and that got us stopped out today. I did that for a couple different reasons. Number one, pullback is possible here. It doesn't really surprise me. And we do have this shooting star formation off the top. You do have the same thing situation here. We've got a bearish divergence here trending down while the closes were trending up here. So this is not sustainable, calling for a pullback. And that's fine. But with the VIX, you can get a lot of decay and stuff like that going on. So I'd like to just let the, get myself stopped out and re-enter the situation here. I wouldn't short the VIX in this situation, even if you were going to go long the S&P. I wouldn't short the VIX because you've got this major previous resistance line here that you were having problems at, and then again, and then you broke out of it. That's resistance is now going to be acting as support. So downside, not a lot before you get another buying opportunity. So I wouldn't be shorting this, but I would be stopped out of my long position here and just lock in those gains. Okay. Now you know. If you've not been to our free website at perfectstockalert.com, it's right there. It's 100% free, and all we ask in return, please refer a friend. God bless. Take care, and I will see you in tomorrow's video. Please take a moment to review our disclaimer. The information provided herein is our opinion only. Under no circumstances do any statements here represent a recommendation to buy or sell securities or make any kind of an investment. You are responsible for your own due diligence. To summarize, we do not provide investment advice, nor do we make any claims or promises that any information here will lead to a profit, loss, or any other result. These videos are for educational purposes only.